Welcome back to the channel, Trader Jan speaking. This is the review of the trading day of the 16th of April 2026. Now we have April the 17th, 2026. And it is 10:20 in the evening, Chicago times. All the times I tell here are all in Chicago times. Why is that? I'm trading futures at the CME, and that is the local time over there. Now the market is already open. The Asia session is going on. The market does what it does best at that time, usually ranging. It's just a range about 200 ticks. Not much to see there, but the purpose here is actually reviewing the locations which we defined for the trading day yesterday, and if they actually helped in any case. Now let's look at the 50-minute chart where we define the locations. We were running out of locations yesterday, and that was because we hit all-time highs. We did the assessment short before the American session, somewhere around this time here. So that location here, not a big surprise that it's known. That was the high of the previous day, and that's the market reacted here as well. Went back up here. Then this high here and that absolute market high, which was known at that time already. So the market in that range, was kind of interesting. Can't really say that the locations helped a lot. I probably should have done this location here a little deeper, so to include that area here, that high volume area, or even from here to here, then it would have catched that down here better, and this down here as well. This location here was the low of the day. This one, nobody can predict the market, so that's going to be tough. Now we are down 460 ticks again from the all-time high, and we're going to define the locations then for today. So overall, I wouldn't say the locations have been a great success for this day, despite all the confidence we gained in the locations from other days. Looking at the trades, the result of the day is quite good for me, with some good and not so good things. I did, how many trades did I do? I did a lot of trades yesterday, 49 trades. And that one is the right. 49 trades and 401 ticks plus. I ended up the day with plus. Overall, looking at the chart here, that's the development of the ticks over time, and that reveals a major flaw in my trading. If we look at the maximum drawdown, which is actually from the maximum to the bottom, and that one was one time, two times, about 400 ticks. So from 200 plus to 200 minus. And that is not good. What is good? Okay, I recovered. And the recovery at the end of the day was quite impressive. So I had a recovery of about 600 ticks from minus 200 to plus 400. When we go to the trades, and 49 is quite a bit of trades, I did some learnings, try to focus on the biggest learnings. So let's go back to the chart. Here we are. So my typical fashion, I marked the trades on the chart. That's the way I like to review my trades. That's the way I do the assessment of the strategies. So I like to match them with what's I actually traded. So, and looking at the beginning, I started trading in the European session already. Started quite good with 63 plus and with 79 plus. So both of the times I've been, moment, let me show the trades here. Here I've been, that entry was not correct. It's like I didn't wait until the closure of the candle. I should have waited until that candle closed. Big pushback, 200 delta, that's a 200 delta chart. And then from here, from that strong upwards delta, I should have entered the market, even though it's the only confirmation here is a change in delta and the distance the market made of 65 ticks. That's the only real confirmation, but I should have started here and ended here. Should have been 160 ticks. Anyhow, I did better next time. So the market came back to this little area here. This green area in the background comes from a candle which was very high, very strong with a high volume. So I anticipated, okay, when the market comes back here and the market shifts delta, then I can go up. So here I waited for too long. I stopped here, but I should have actually just closed the trade over here. Done and dusted. Here that trade was within a range. So here you see that was a range developing, and but was too late in the range, and so not a good trade. Then hit a couple of misses, even though that trade I would do again because the market structure shifted here, so it came back up, but the market wanted to follow the lower deviation of the VWAP, so no luck for me. The bad thing about that one is that it had to run into the stop loss of minus 100 ticks. It shouldn't be, because once the market goes below this one here and goes towards a lower low, I should have stopped out. That one would have been just 42 ticks. So biggest learning here, when the market doesn't go into your way, then go out of the markets when structure shifts. When it's know your stop loss, and the stop loss doesn't need to be 100 ticks. It can be if the market goes against you, and then just go out of the trade. Protecting money, protecting liquidity is one of the most important tasks of a trader. Here, going in here is okay, and the markets developed a downwards dynamics, so that's okay, but it's decided to go at the lower deviation, go up again. And it essentially went up and down here between, it's kind of a range, but not a pure horizontal range. But that might be a learning as well for me. Sometimes the market, like here, doesn't go between my range, because I was waiting until it arrived here at my location. But actually what it did was it went between the deviations of the that's an interesting finding now, between deviations of the VWAP, because here, as you can see, this one here, it went down here, but with not a lot of volume. So after that big pushback, I could have easily came in and then go into the VWAP. Then it turned again. This one here as well was not a lot of volume. It turned again. Okay, came back. Maximum stop loss of 47 and then back to the VWAP. Here, not a lot of volume. It turned back. And then here to that VWAP. That's a big learning now. That's an interesting finding. So trading between the VWAP ranges and here as well. It is a range, but not a horizontal one, which I always was expecting. I like range trading, but that one here is a diagonal one according to the VWAP ranges. VWAP deviations. Okay. Then a huge trade. That one was 357 ticks trade from up here to down here. Really nearly the extremes, nearly perfect entry. And then going down here. Market shifted the structure here, so I went out here. Then, yeah, some of the trades where I just went in and out too far, too fast. Here, market shift, the market shifts, goes down, and then here I should just have waited until next candle and against my direction. But I went out here already. Here another minus 100. Why did I wait for so long to close the trade? The market went against me, for me, and then hope took over because here the structure changed. But once the market goes over that one here, I should have closed that trade. Here, yeah, remember that one. Here it went like 95, 99 ticks against me. Didn't hit my stop loss. And then I was so happy I was back in profit. And then it made even the price action move into my direction. I thought, oh yeah, that's gonna be a big winner. Gonna continue this trend. No, it was not. So, okay. So those were my trades. Had some good trades, had some big trades like 250 ticks, 200 or 350 ticks, 230 ticks, 200 ticks, 85, 87. And then I went out of the market when we couldn't pass that level anymore here, which I marked before on the chart. That was based on this huge candle here. And yep. So final result from 16th of April, it's 401 ticks in 49 trades. By far too many trades. I didn't protect my money enough. I should have cut the losers shorts faster. And some of the winners I did not let run until the next location. And big learning for me is taking care more about the VWAP deviations when the market gets into ranges between the VWAP deviations. That's it for that review of the day. Enjoy your day and see you down at the trading floor.